The State of Real Estate with your host, Gerry Lantain.
Hello and welcome to the show. I am your host, Gerry Lantain, and this is The State of Real Estate. We're going to start off today's show with the market report, and we're going to be comparing April 20 stats to April 2021, that is. So these stats are brought to you by the Lakeland Association of Realtors. Now, the median price of homes, which is like an average, the median price has gone up by 41% from last April to this April. The average price has risen by 36.5% in the same time period. New listings are up by 195% this April over last April, but that makes sense because last April people really shut down during that was the real lockdown of COVID and had everyone shutting down. The interesting thing is that the inventory homes available for sale this April was actually 35% lower than last April. And actual sales, which is incredible, are up by 268%. So we have less homes on the market and almost triple the amount of homes being sold in the same time period. The average days on the market for a home, and this is a good indicator of how fast the market's moving, how strong it is. Last April, it took 27 days to sell a home. This April, the average is 9 days. That's pretty mind-boggling, really. That's a big difference in time. And the percentage of overall asking price that people are getting is actually over asking by 6.6%. So again, we are still in a crazy hot market for sellers. Sellers having the upper hand in this market. That's the market report for this week. We're going to get back to the show, and we will be speaking with Adam Caswell from Hutcheson Reynolds Caswell Insurance Company. All right, and welcome back to the State of Real Estate. We are here with Adam Caswell from Hutcheson Reynolds Caswell Insurance.
Hi, Gerry.
Thank you for your time today.
You're welcome.
First, let's get this out of the way. Where can we find Hutcheson Reynolds Caswell, and how do we get a hold of you guys?
Well, you can find us in location if you're ever allowed out of your house.
Yeah.
In Huntsville, Bracebridge, Port Carling, and Collingwood. You can find us online at hrcinsurance.com. as well as cottageinsure.ca.
Okay, perfect. So, the state of real estate and insurance. Home insurance is an absolute must and a necessity, and in many cases, you can't get a home if you can't get it insured. What is the number one primary form of home insurance that most people need and get?
The number one form would be what's called a comprehensive homeowner's policy.
Okay.
And so what that is that's basically an all-risk policy with a few exclusions that are on it. And so the exclusions are listed. So what happens is if it's not excluded, you're covered for that.
Okay. What aspects are covered by that then? Like I'm just generally going to roll off liability in case someone falls and cracks their head?
Exactly. Liability is a big thing.
Okay. Fire and theft.
Fire and theft, those are big things, but water is actually a big problem, right?
Okay.
You have burst pipes within your house. You have a lot of policies call it sewer backup, but really it's backing up of any drains within your house.
Okay.
So what that would mean is if you have a drain in your basement and that backs up, that would be covered under the sewer backup, even if you're on a septic or a well.
Okay.
As well as that would be if you have a sump pump in your basement and your sump pump malfunctions and that floods your basement. So that would be covered under that sewer backup portion of your policy.
Is it possible for that to happen on a municipal system?
100% it's possible. If you get enough water in a municipal system, it will back up through there. There are a few preventative measures you can have. You can have a basically it's a sewer backup device that goes on your main exit pipe out of your house, and it's a flap basically that allows water to go one way and not the other way.
All right. Does that help reduce insurance costs for a homeowner?
It may help you get insurance as a homeowner. If you are in an area that has been prone to that, an insurance company might require you to carry that.
So let's talk about renters then.
Yep.
I have a renter in a home.
Yep.
They have to have insurance.
Yes, usually if you have a home that you are renting out, one of the requirements of the insurance company is that your tenants have insurance. And that's a twofold reason. One is for liability, so if they have friends over or they have guests over and those guests hurt themselves, that policy is the primary policy to respond before yours.
Okay.
The second reason is if they cause a whole bunch of damage, that your insurance company has a recourse with their insurance company.
That's a good question now. What happens if I have rented out my house, because it happened to my wife and I once, and the tenant left and it was a nightmare. It was a $5,000 nightmare for us. We didn't go to insurance, we just did it. Would insurance cover a crappy tenant like that?
So they do cover damage due to a tenant, but the problem is if it's over time, it could be 2 or 3 or 4 incidents. So let's say you have a deductible and your deductible is $2,500 and they deem that, this happened over 3 or 4 times, that would be 3 or 4 deductibles.
Ouch,
that would
yeah.
happen, and then you would have 3 or 4 claims on that house, and so if there's one specific thing that they do, like light the house on fire on purpose, that you would have coverage for stuff like that.
Okay, now, is this a urban legend or myth? If there's a fire hydrant on my property or closer to my home, is my insurance rate going to be better than someone else's?
Definitely, that is
Really?
not an urban myth.
Okay, all right.
So basically, insurance companies look at, they look at, when you're looking at hydrants, you look at whether there's a hydrant within 150 meters of your house, and then they go to how far is the fire hall from your house? Is it within 15 kilometers of your house? And then can a fire truck actually get to your house?
Right.
So there's kind of 3 phases of that. So no, it is not urban legend.
I did not, I just always assumed that was just, oh yeah, right, there's the one across the road and there's one on my lawn.
Yep.
So what would be, say, I guess I'm going to get into what banks do and don't want from you and an insurance company after the break, but what's the biggest problem that you find with homeowners and insurance in terms of them not understanding what they need to do coverage-wise?
Well, basically fire.
Okay.
Like if you get to your basic policy is a fire policy.
Okay.
And then you block on top of that all the way up to an all risk. So you can go fire and extended perils. So that's fire, lightning, windstorm, hail. Then you can go broad form, which is kind of all risk on your house, and then name perils on your contents, which is your fire, lightning, windstorm, hail. And then you can go to a comprehensive policy.
And do you have to be very specific about every element it's being covered?
If you're going to try and have a basic policy, yes, you've got to be very specific as to what and you can't say, well, I want fire and I want snow load, but I don't want falling object. You can't do that.
Okay. And then you can choose your amount of deductible. Is that correct?
Yes.
Okay.
So your deductible will lessen the amount that you're paying to the insurance company because the insurance company looks at how much of a risk you're taking on.
Okay. So $1,000 deductible, is that fair, or like will I get a better policy if I'm at 2,000?
Usually they say if you go from 1,000 to 2,000, it with some companies it can save you 10 or 15% on your policy. And the way that I look at deductibles is I look at if I'm going to save it over 5 years, then it's worth it to take that deductible.
Right. Yeah. Yeah. And then in terms of cost, is it a square footage basis?
So what they look at is they look at what the rebuild is of the house, plus the debris removal. So right now, you're looking at maybe $300 a square foot to replace a house, and so then if you have 1,000 square foot house, you're looking at $300,000 to insure it.
Now, materials have gone through the roof over the last year.
Yep.
How do they calibrate that?
So a lot of insurance policies have what's called guaranteed replacement cost on their policy. So on a homeowner's policy, you would have what's called guaranteed replacement cost, or GRC. Basically what happens is you have come to me and said, hey, I've got a 1,000 square foot house. We feel it's going to be $300,000 to replace it. You feel it's going to be $300,000 to replace it. But over the course of the year, the materials go through the roof, and it's actually $450 now. If you have GRC on your policy, they will pay the $450,000.
Ooh, I like that. I think we're going to make that the tip of the week.
Okay.
Okay. We're going to cut away and come back with Mr. Adam Caswell.
The State of Real Estate with your host, Gerry Lantain.
Welcome back to the State of Real Estate. I am your host, Gerry Lantain, and we are with Adam Caswell from Hutcheson Reynolds Caswell again.
Hello, thanks, Gerry.
So, there are a number of situations that I've come across in the last couple of years where insurance is hard to come by on particular properties.
Definitely.
Let's talk about off the grid.
So off the grid is, when it first came out, it was tricky because insurance companies didn't trust the solar systems, or there was somebody that had put in a solar system, they had bought it at a hardware store and kind of rigged it in their house, and away they went. And there was problems with that. And so they've relaxed their requirements on it if ESA has looked at it, or you've had an electrical contractor that knows what they're doing come in and install it.
What is the big worry about the off the grid? That why won't insurance companies sometimes not insure an off the grid? What's the biggest worry? I have an inkling of an idea.
To be honest, I think that there might have been a couple of fires early on, and that was part of the problem. I think another part of the problem was the batteries.
Okay.
But right now, we've got a whole bunch of off-the-grid stuff insured, and we've had no issues with it.
That's really good to know, because sometimes it is hard. I've had some clients, we looked at a home last year, we got rejected because they said the pipes. They had no confidence in the system that if something went wrong, there was a backup to keep the pipes from bursting in the winter.
Oh, okay.
Yeah. Okay, so let's talk about another one that difficult to insure, and that's like flood zones, kind of like our good old Big East River area.
You betcha.
How do we deal with that? When you've been turned down, where do you go?
You know, when you're in a flood zone that has flooded over the last couple of years and will continue to flood over the next couple of years, it's super hard to get insurance in those areas.
Okay.
We struggle with people calling us and saying they need coverage in those areas, and banks are very keen on saying we need full coverage and we need sewer backup and overland water or flood coverage, and just insurance companies know that within 15 or 20 years there will be a problem there. And
yeah, because it's kind of inevitable, right? So what would someone do then if they, is there another alternative that you guys can find, like that Hutcheson or any other firm can find, if the standard people say, no, not a chance in heck?
We haven't found if we could find a spot, we would have a great niche in the area, or if somebody knew of somebody that could do that, we would definitely push business their way, just to say, hey, look at, you're looking for something, we can't do it, but these guys can definitely do it.
And so basically, if that's the case, then they basically fail, and they're not really allowed to buy the home, and the bank will say no.
It is tough, and there might be companies out there that don't look at floodplains, and they just look at an address and they say, okay, you know what, we'll insure it there. But companies are getting more and more sophisticated, and so they're looking at all sorts of data, and that's one of them.
What about wet certificates? Does that bother you guys at all?
Nope.
No?
You still need them. Like a lot of places still need wet certificates, because of the fact that they want to make sure that the stove is installed to code. It's not good enough looking at the back of a stove and seeing what the measurements are and measuring it yourself and seeing, oh, yep, it complies. No, unfortunately, we can't do that, but somebody with WETT behind their name needs to do that.
Yeah. Now, is a home that has a wood stove that is not been wet certified, is that insurable?
It's very tough.
Okay.
It's very tough. There would be companies that would look at doing it, but then they might exclude that. They would exclude that wood stove.
Right. So that if that caused a problem, there would be no coverage.
Correct.
Okay. When it comes to home insurance, what would be the easiest way to present your case as a homeowner to you guys to get the best deal going? I mean, how do we ask you to look at 3 or 4 different providers?
Yeah, so we as a broker have access to multiple different companies. And so what we do is we look at, when you come into our office, we look at what the best rate is with all of the companies that we deal with. And, you know, with insurance companies, location is a factor. Claims are a factor, and credit is a factor with insurance companies as well. They look at your credit history.
You're kidding? Okay.
Nope. Probably 75% of the insurance companies in Ontario right now look at credit as a factor when they're underwriting somebody.
Wow, that's interesting. What's the principle on that? Just that.
You know, I think that they look at it as if you have good credit and you have an issue with your house, you will keep up the maintenance. Right. And if you have bad credit, you might not do. And I don't necessarily agree with that, but that's what somebody south of Toronto says.
Right. I had a question again. These questions come and go when I'm doing it here, but
my answers are too long.
No, they're good. They're good. Actually, they spawn other questions. So I'm just trying to about rental. Mm-hmm. So I have a renter. They've got their insurance coverage. Do I need to overinsure it by having fire insurance as well, and theft and liability?
So they're not insuring the building. They're actually insuring their own contents and their own liability. Mm-hmm. So you still need to insure the building itself. Mm-hmm. And you might have some contents in there yourself. You might have a fridge, a stove, washer, dryer, some other things. So you need to insure that stuff. The liability, you want to insure you want to have liability in case your tenant sues you, because they might slip and fall and sue you and say, you know, you were negligent in what you did.
Right.
Or what you didn't do.
Yeah, you know, you guys had a great commercial a couple of years ago, and it was you doing it, and it talked about children living in your house,
yes,
having their own place. A lot of people don't realize this.
Yes.
Can you explain what that commercial mentioned?
What that commercial did mention was the fact that children, when they come home from school, are no longer dependents, but they are still living at home. And so they may or may not have coverage in your house, and you should check with your insurance provider to make sure that they do have coverage. So they may or may not have liability, or their contents may or may not be covered.
So the place something could happen, the whole house burned down, and because they are no longer technically your dependent child,
correct. Yes,
all their belongings down there will not be covered.
Correct.
Wow.
Or they could have a little dog, a fur baby of sorts, and that fur baby bites somebody, and all of a sudden that liability falls on that child, but the issue is there's no liability because the child does not have...
So the dog bite is covered under home insurance?
Definitely.
Incredible.
Yes.
Interesting. Cats too, I guess?
Yes. Yes.
So, okay, well, you know what, that's some good information. Is there any kind of little forwarded advice that you could give to homeowners or home buyers?
Well, you know, a lot of people may not tell the whole truth when they're talking to an insurance broker to try and get a better rate. Mm-hmm. But the issue is you want to be upfront, because the best thing to do is tell the whole story. Yeah. And from there, your insurance broker can work around stuff. Because the last thing you want to do is pay insurance for a couple of years, and then you have a claim, and then you find out that the insurance company denies it because of the fact that something was not disclosed prior. Okay. And then they would void your policy, and you'd be out of coverage. But you know, trying to not say something in order to save money may cost you in the long run.
Excellent. Okay. Well, you know what, Adam, thank you very much.
Thank you.
It's a really good and interesting episode for people to know about, and I appreciate your time.
Not a problem. Thank you.
All right. That's the end of today's episode. So have a great day. Okay. This week's real estate tip is about home insurance, and it's about something called guaranteed replacement cost. That is something that you do want to have on your policy. And it works in terms of, say you have a house that's worth $500,000. and it burns down. And the insurance company has agreed to pay for the house to rebuild it as it was for $500,000. However, between the time it burnt and the time it's going to be built, the cost of materials has gone up, like it has actually in reality in the last few months around here. The guaranteed replacement cost guarantees you, the insurance buyer, that no matter what the value of the materials are, the house will be guaranteed to be replaced. So that is something you probably do want to have on your insurance policies for your homes.
The State of Real Estate with your host, Gerry Lantain.